you have like the third group that are sailing away off in those boats, those rowboats, and they're going to make it. And we kind of know who those people are right now, right? And how do you know this? It's looking at the balance sheet. Whose ship is going to sink? Who's going to sort of maybe make it? And who's already, it looks pretty good that they're going to survive.
Guys, welcome back to another episode of The Dime. I'm Brian Fields. With me, as always, is Kellen Finney. And this week, we got a very special guest, Matt Karnes, founder of GreenWave Advisors. Matt, thanks for taking the time. How are you doing today?
I'm doing well. Thank you guys for having me. And thanks for calling me special. Not too many people do. So
excited to dive in. Kellen, how are you doing?
Doing really well. I'm thrilled to talk to Matt. Grateful, actually. Excited. Nice, beautiful summer day out here. We're going to dive into MSOS markets and all the fun stuff. How are you, Brian?
I'm excited. Matt is going to help solve a lot of the problems that I don't know if are solvable, but at least we're going to ask him to help us fix a lot of the issues we have, and maybe they aren't fixable. But before we get into that, Matt, it'd be really helpful for our listeners, just give a quick background about yourself and how you found your way to the cannabis space.
Sure. So I started my career in public accounting. I was an auditor. I worked for the Big Four. Then I had a couple of corporate jobs, and I ended up, after I got my MBA, on Wall Street in equity research. I worked for Cowen as well as Bear Stearns. So I got solid experience, gained solid experience on the sell side. And then I hopped over to the buy side. I worked at a hedge fund for a number of years. And after our fund, this was like 2010, 11-ish, 12-ish, our fund sort of blew up. And I was sort of looking around like, what's the next step for me? And I was just, at that point in time, there was a lot of buzz around cannabis, around medical marijuana, about what was going on in California. So at that time, I just kind of packed up and I drove up to Boston for what was then one of the first cannabis conferences, and just been kind of following the industry ever since. In the summer of 2014, I actually went out to Colorado because my interest level, I maintained my interest level over, the past several months out to Colorado. It was like the big conference at that point in time, and it was about 800 people. And as you know, to put things in perspective, as I know you guys have been out to MJ Biz, there's 30,000, 40,000 people. So it just puts in perspective how much the industry has grown over the last 11 years. And so I've been at this now, believe it or not, for 11 years. I thought it was a really good idea at the time. I still do. I still have hope. But I would say, just based on my background, my lane is really numbers and things that are more quantitative. So I've stuck to that lane. So I started GreenWave in 2014. It was exactly 11 years. It was July 2014, actually, that I formed my LLC, my S Corp. And the goal at that point in time was to provide industry research. Now, I was like really, really early because there was, number one, there were really no investors. There were no real companies, but nonetheless, that's kind of what I started to do. And I started realizing very early that there weren't really many companies to really talk about without really jeopardizing my reputation. So what I did was started to publish on just some macro level issues. And then along the way, I got involved in a lot of different types of projects, due diligence, valuation work, just a whole lot of different things. And along the way, over the years, people had come to me and asked, hey, could you help us raise capital? And I've never been able to do that because I wasn't licensed. All my licenses had expired. So about 2 years ago, a colleague of mine that I worked with at Bear Stearns hit me up and he said, hey, Matt, why don't you come and join us over at Stonehaven, which I refer to as Stoner Haven, given the industry that I'm in. And I joined Stonehaven as an affiliate partner. And now I have that capability. And what's attracted me to Stonehaven is the fact that they cover a wide variety of asset classes as well as sectors. And it's a really unique platform to collaborate with other folks sort of in my situation that have come off of Wall Street and are, still active in the sector in some way, shape, or form. So that's kind of like where I am right now. I'm kind of driving in two lanes. One lane is sort of the consulting arm, and then the other lane is the capital raise. And hopefully those two lanes will not collide.
So to go back to what you said, two things. One, you said before you thought it was a great idea, as in past tense, but sure, I know the optimism is hard after a while. You kind of get beaten to a pulp and it's like, I'm not really sure. Can I stay optimism until I see some changes? But then the second one that I really want to talk about is the numbers aspect.
Mm-hmm.
So if your background is in numbers, talk to us about the state of the industry and the health of some of these companies. Are the numbers reflecting a healthy industry or they're reflecting something else?
Well, it depends who you're talking about. But I would say, it's unique. It's nothing that I've ever experienced, just because of the dichotomy between federal and state law, just how this industry has evolved, all the different challenges. But what I would say is, and I think we talked about this, by the way, it was great to see you guys in Chicago. I think, the way I would categorize the industry is really, have you seen the movie The Titanic? So if you think about the end of that movie, right, there were three outcomes, right?
Spoiler alert.
We literally were just talking about this today, Matt. It's wild. I literally used a Titanic reference like an hour ago after we got off the call.
Yeah. So the first
continue. Sorry, I didn't mean to.
The first outcome is the folks that are on the boat and they're not getting off that boat, and that boat is going down, right? They're going down with the ship, right? So that's one outcome. Outcome number one. Outcome number two are those folks that are like holding on to the, pieces of wood and they're kicking and paddling and they're just hoping they're going to get to shore, right? So maybe they'll make it, maybe they won't make it, right? So, and then you have like the third group that are sailing away off in those boats, those rowboats, and they're going to make it. And we kind of know who those people are right now, right? And how do you know this? It's looking at the balance sheet. Whose ship is going to sink? Who's going to sort of maybe make it? And who's already, it looks pretty good that they're going to survive.
Hold on. Let's talk about that. Is it that clear today that people have made up their fates, that there are no chances for the team that's playing the music on the boat still to make it into the ship, the life vest?
Well, I remain optimistic, and you never want to say never, because, if things change at the federal level, tomorrow things could change very quickly. And we just don't know when that day is going to happen. So, I would say, in the way I sort of kind of laid this all out as to who's likely to be in what outcome of the Titanic, is I did a heat map of the cash flows, right? So what I mean by that is I looked over the course of 6 years, because this is a marathon and not a sprint, right? So you can't just necessarily look from one period to the next, right? So over 6 years, which is about the amount of time that these companies have been public, by which I have actual financial information. So what I try to do is look at the cash flow from operations and look at the amount of taxes, 280E, that has been paid as a percentage of the cash flow from operations, right? And hopefully this is clear to everybody out there, but really what the takeaway is that the tier ones basically have scaled, generally have enough cash from operations to pay their 280E liability, right?
That's
even though
that's correct. Like we're going to use that as that's a positive marker.
Yeah, that's a total. That they're on that boat.
Got it.
They're going to they're going to make it. They're going to get to shore, right? That's how I kind of think of those people. And then you have some folks that have not quite generated enough cash flow to pay their taxes. Maybe half of say the tax liability is $100. Maybe they generated $50. Right. So they have some money, but not all of it. But they're kind of waddling around. Right. So those folks. And then there's some that have like never posted positive. Very rarely have they posted free cash flow from operations. It's been negative. They've been burning cash every quarter, every year. Right. And now we're at a point, yeah, exactly. So, like, what do you do? I mean, the debt markets, all the access to capital is even more challenging than it was in years past, given the fact that these companies have, a lot of them have already, levered to the max. And so that's like where the challenge is. If that answers your question.
No, I think that's super clear. And then just to kind of get a little further, sorry, we kind of bucketed all the tier ones into the safety measure, but they have ranging amounts of debt. So how does one retail investor, a normal person, understand the different components to know which ones of those are more advantageous and interesting and which ones are more problematic, have financial situations that make you say, I'm a little hesitant. If you could have names, please share them.
Well, I actually have to be very careful because of naming names, because of the fact that I am, the other side of me is affiliated with a broker dealer and I'm subject to all these compliance things. So if, that's
It's
why.
just three of us.
Yes, and 2 million other people, I'm sure.
God willing.
We're not Joe Rogan. Come on.
In answer to your question, debt, it's really challenging, right? Because you don't want to give convertible debt because you're going to be diluting the hell out of your company. I think, one thing, and this actually was something that came across the tape yesterday, was that I think it was Terracin. They're actually liquidating or getting out of the Michigan market. And the proceeds of that transaction will be used to pay down debt, right? So I'm just wondering, if many other companies or other companies that are going to be faced or up against a debt wall, if they will, kind of follow suit and liquidate the non-performing assets. But that's sort of, that's clearly one method to generate or have cash available to satisfy the debt obligation.
I heard that there's like a massive debt obligation coming though in like 2026, right? I think I heard someone say like 6 billion is going to come due in early 2026 for a lot of these companies. Is there validity to that?
I don't have the exact number, but that is definitely the case. And whether or not they're going to be able to refinance is yet to be seen. I think if something doesn't happen at the federal level, because it's going to be increasingly more challenging, particularly as this 280E liability builds up. And I'm sure you've heard about that over the course of, last couple of years, where a lot of companies are not paying their 280E, they're holding back. But, at some point in time, that issue's, I don't think it's necessarily going to go away. But my view is that the IRS will work with these companies to figure out some way to satisfy the obligation. But, it's still a big question mark. So, hopefully, I think it was Ascend that recently refinanced, maybe a couple others are along the way. But I think that's really going to be one of the most important things to consider is how are these obligations going to be paid?
When this debt comes due, though, do they have any other options except for refinancing? Right, essentially, refinancing is them just saying punting the concept and saying we'll get to this later on.
As I say, it's kicking the can down the road.
Well played.
But what are the options, right? So you owe, say you own a house and you have your mortgage payment due. Well, say there's a balloon payment or something, and you just don't have the money. Well, then what happens? Well, they take possession. The creditors will take possession of your asset.
So in that example, if the creditors take possession of the assets, a lot of these creditor companies would then be in possession of all the tier ones, is what you're saying?
Well, no.
Or specific assets in certain markets.
Yeah, well, I think the tier ones are not going to be in that situation. I think that they have, like I was saying, they have enough cash flow from operations to satisfy everything. It's a lot less favorable if you factor in, because in this exercise, this heat map I was talking about, I looked at the actuals and then, okay, what would the cash flow profiles look like if the 280E was paid? And if it was paid, we essentially, the tier ones still have enough cash, not as much cash, but they still have it. So it's really the others that, are concerning. And I don't really have a good answer for how exactly each entity is going to, fare during all this. But yeah, we just hope that the creditors, everybody will work something out. But in answer to your question, it's not the tier ones, it's the folks that have debt due, that are unable to, maybe make their interest payments, and then the creditors are left holding the bag. No pun intended with that too. But
is that where there could be like a domino effect that take into place where, sure, like for some of the tier ones, they're vertically integrated in certain markets, so they're kind of protected from those. But in other markets where there's no vertical integration and they're relying on some of those other smaller operators, that could be problematic for them in certain spaces, right? Because they're kind of all interwoven together to make the market successful.
Yeah, I mean, so what you're saying is if a tier one is in a market with someone who's, like a tier three, if there's a domino effect. Well, I mean, I think the strong in that particular instance, I think the stronger will get strong. The strong will get stronger.
Oh, that's a positive statement, right?
Yeah,
Where
yeah.
in that aspect, that's survival of the fittest, which, yes, unfortunate for some of those elements, but at the end of the year or at the end of the day, the stronger will survive. So when you're talking about an industry reset, is there something specific in mind that you're thinking, if this happens?
So what I mean by that, right? So the industry, first of all, I think it's been very problematic in the sense of, how has this industry been operating, right? Early on, and this is something I observed, back in 2014, the quality of people that are working in many of these companies, particularly in the early years, were just inexperienced. There weren't people that were going to leave their day job and come work in cannabis, right? There was reputation risk. Not only that, and being an accountant and the numbers guy that I was telling you about, it was very clear to me when I learned that these businesses, the industry has to operate in all cash, right? So if you think about like a grow op or whatever, people sitting there counting the money and then taking that money and putting it somewhere and then recording it into the books and records, right? It's a shit show. It's a like a complete 100% mess, right? Adding to that, you don't really have adult supervision. You don't have real instruction because it's a new industry. Nobody's really figured it out. The big accounting firms are the sort of the first, second, third tier or whatever have not had at that point not stepped in. So there were problems that festered, and these problems continued to grow. And early on, there were, there was a lot of excitement. There were a lot of acquisitions that were happening. There were integrations that had to happen that just were getting out of control in terms of efficiency. And so you have all these problems that materialize. Then you have what I consider, the added cost of prohibition, right? So 280E is the biggest cost, largest cost, most onerous cost. And we all know about that, but there are other costs, right? There's added compliance. There's added insurance costs are higher. Cost of capital is higher. And when you take all that into consideration, when prohibition ends, there's going to clearly be more of an acceleration in free cash because you're going to likely attract more qualified people. There are a lot of mistakes that have been made. When a mistake is made, it costs time and money to redo. And a perfect example of that is all these financial restatements, delays. A lot of times, it was oops, we made a mistake, that type of thing. And if you had more experience on the bench, I don't necessarily think that, we would notice all these things. And I think, when prohibition ends, there's going to be, a lot of uncovered benefits. And so that's what I mean by a reset.
Is there a single event that can occur in order to reset the industry the way you're envisioning? Like hypothetically, let's say I gave you a magic wand. I say, all right, Matt, you're king for as long as you need. How do you fix the industry?
Yeah, well, I would say so we are, I do believe, on the cusp of something. Now, I don't want to, sound like, I'm hyping the industry or whatever. But honestly, and I haven't, I've been doing this for 11 years, and
77 in cannabis years.
Yeah, probably even more. But clearly, the reset that will happen with Schedule 3 will happen with Schedule 3, because at that point in time, there'll be just everybody could just kind of put their bags down and relax and not have to worry about, oh my God, I'm not paying it. How much? Is the IRS going to come after me? All that kind of stuff. So I think now one thing I would mention is the cash. I mean, there's a lot of companies that have not paid it, right? So you might say, well, they haven't been paying it, so how is the cash going to improve, right? Because they haven't paid it. Well, number one, we don't know how that's all going to play out. Going forward, how much of that's going to have to be paid over what period of time? Are there going to be penalties assessed and that type of thing? And there's also, associated with all this, I guess without getting too complicated, even though the cash flows are, not going to really change much because of the fact that, as I mentioned, a lot of companies haven't paid it. What is going to, we'll see a notable improvement is the net income, because the 280E has pretty much decimated any pre-tax income, right? So we'll start to see the companies won't have to accrue for their income tax expense. So we'll have, more companies will show positive net income. And that's something that will start to, be noticeable. And, at some point, maybe, down the road, not too distant future, we'll start to see valuations based on PE ratios as opposed to some other metrics that are currently used.
So, Matt, you talked about positive net income. One of the elements that if companies start showing that could be that it could attract investors to the space, which could then accelerate the growth. So what it seems like is we've got this kind of like circle or this like fire that's ready to absolutely rip through, and it just needs that first match in order to get started.
Yeah. And what I would say is, things are starting to happen now. They're all starting to come together, right? So it's hard to even imagine that, like, going back to 2014. If you were to ask 2014, Matt, will we be talking about 280E in the year 2025? I would say no way. We're just going to go, probably 2020. Yeah, that's it. 2020, magic number. But it's what's happening, in Washington. I really do honestly, wholeheartedly believe that Trump is going to act. This is not the first time at the rodeo for him. I mean, as you know, he dealt with this issue in his first administration. And if he wanted to shut it down, he would have shut it down. And I think, back in 2014, or actually it was 2012, when they greenlighted the Colorado to be the experiment to be the first state in the country to legalize recreational use. I think there was some thought like, okay, let's just see how this goes. I don't think the intent was like, let's just let this linger on forever and just have everybody just keep spinning around in circles and circles and, lose money. To have that mindset would be just very sadistical. And I think Trump is, as many people would agree, he's, clearly a businessman. And I think he, will see the economic benefits, notwithstanding all the social benefits, to get folks out of prison. He's got a lot of people, in his inner circle, Mike Tyson, who can't help but say this, but he has his ear. And but there are a lot of people around him that are smart, and it's just everything is just all common sense. And I think the dialogue around testing is starting to become more of an issue. I mean, I think that's common sense. I mean, obviously this industry is not going to be federally legal until the government understands the industry. And they're starting to do that. There are a lot of working groups. I think one issue that's, very concerning actually for investors is the sales growth or lack thereof, right? So you're an emerging industry and you have revenue growth that's either, flat to down a little bit, nothing really substantial. You get some growth from new markets. The growth kind of lasts for maybe a year or two, and then it starts to decelerate. And so I think now there's focus on the Chinese cartels. There's focus on the illicit shutdowns in New York. There was a bust. I mean, we're hearing about this in different cities, right? So that's an issue. Check. Testing, check. So like a lot of things are starting to come together. And I think one hidden gem that a lot of people aren't really necessarily focused on, because everybody's looking at this industry from the standpoint of recreational use. But if you look at the other aspect, which is the true medical, there's a lot of new developments. There's, research that's going on. The DEA had issued 8 licenses for bulk manufacturing and research. There's some companies that have made great stride. So even though these type of products won't be necessarily, a part or incorporated in the revenue streams of some of the larger, or some of the MSOs on the rec side, there is still other investment opportunities that I think are very compelling. And when I launched GreenWave in 2014, when I wrote my first research report, that was one of the things that was an integral part of my thesis, is that, the medical as it exists today and rec will combine into one substantially larger market. That will go one way, and then we'll have another path for, pharmaceutical type products that are targeted with precise dosage, with precise efficacy and all that. That's all, I think, part of the reset. And also with Schedule 3, that will enable more research to be done more easily, I would say, research on different aspects of the plant.
How much movement needs to happen internationally for like a full rescheduling? Or do you think that like there's got to be some interconnection between like what's going on in Europe and like why we haven't fully pushed rescheduling through, right? Like there's like international narcotics treaties, right, that would be affected. So like, how is there more movement on that side from a national perspective that's needed?
Well, we know that Germany has moved forward. We know that there are a lot of exports coming into, or imports going into Germany from many different states. Primarily, the most significant is Canada. In terms of the treaty, I'm not a lawyer. I don't play one even on TV, so I don't want to really opine on all that. But we do know that the international market is moving pretty. It's moving forward in the right trajectory, and it's only a matter of time. I remember going out to one of the conferences in London, I think 2021, and I thought at the time, like, they're 5 years behind us, and I think that's probably still the case. And we're hearing more and more about what's going on in Germany. But one thing I would say, right, like, it's really a shame, and it really is annoying when you read about all these other countries exporting into Germany. Like they put out a listing or some report every quarter, and the fact that the U.S. is not on that is it's just stupid, And I think that's another thing that Trump will look at. Like, we're really missing it. There's no reason why the U.S. shouldn't be the leader in cannabis. Right? I mean, there's so many smart people, and that's another thing, right? Why I have such strong conviction in all this, even though I was saying before I thought it was a good idea 11 years ago. I do still think it's a good idea. But if you look at the people that are still standing and some of the really smart people, like, they're successful, they're smart for a reason, because they made the right decisions. And so I kind of, always keep that in the back of my mind. I'm like, who's still here? Who's getting on that ship, or not the ship, but on the boat that's going to shore? And I did an exercise looking at just sort of, what would the export opportunity be? Would the export opportunity be if it were allowed? And if you look at like the exports from the U.S. for alcohol, tobacco, pharma, it's like, I think, like 5 to 15% or something along that range. And so if you assume that you have $100 billion market in the U.S. at maturity, that's about $10 billion. Now, this is just just in comparison, it's just, hypothetical. I can't really say with, straight face that I'd really have a good answer for what it would precisely be. But I think you get the point that it could be substantial.
Back of the napkin math real quick. But I think, like, to go back to what you said about Trump, right? One of the elements that I think we all can agree on is that he for sure would want the U.S. to be involved in that, and the ability to have the U.S. be the global leader or global participant is a critical component that hopefully can influence some change, right? Because we all talk about we need some change. We need some change. Doesn't matter how we get it at this point now. We need some form of change. We need some form of reform in order to get this going. And if that's what it takes, is him feeling shamed, embarrassed, whatever that is, being left out of this conversation, the global cannabis one is a massive one. And watching what Germany's doing should at least open up his eyes and his ears to the concept of, why are we not doing that? And how do we make that first? Because his messaging always is America first. Well, this is an opportunity where we can have America first.
And American cannabis first. Let's just say that too.
Why would people not want California cannabis?
I totally agree. And another thing too, which is part of the reset, as I was talking about, is that I do believe, at some point we'll have interstate commerce. That's going to lower the price.
Are you 100% sure that we're going to get that?
At some point. But what I'm going to say before that, I think, and this has been talked about for years now, having different cooperative agreements between different geographical
state packs,
areas. So California, Oregon, Washington, right? I can't for the life of me understand or think of any good reason if those three states are like, yeah, let's do it, man, let's do it. Why the hell would the federal government give a shit at this point?
They have a treaty that says that they are ready to do interstate commerce.
So hold on. What are the benefits of those three states getting together, though?
Well, I have too much weed. You have too much weed.
Should we just do it just to put some? Just do it.
Too much weed.
Let's just do it to put a little pressure on the government. But Matt, I want to push back on interstate commerce, because the more I've thought about this, the more I want that to be the case. I don't think that'll ever happen. I think states will have some sort of state pact that can opt into those concepts, but I expect that states are not going to want to have to displace those jobs and those companies that they helped spin up, and they're enjoying those elements. I don't know how they're finding a creative solution. Maybe there are. There's a ton of people out there way smarter than me. But I think states are enjoying the fact that they're making a ton of money from this cannabis revenue, and they're not willing to lose those jobs and tax revenue in order to say, okay, everyone can trade, because that's going to put a lot of people out of business.
Well, bear in mind, they're not necessarily going to lose tax revenues because the product's going to be sold in that state. So they're going to get the sales tax revenue. So that's not going away, right?
The jobs,
what's that?
The jobs.
Yeah, so there's, I don't know. If you have retail, it depends how everything's, going to be regulated. That's another problem, though, in the industry for investors anyway, is we don't know how the industry is going to be regulated. There's still a lot of uncertainty, right? So, but I'm all over the place with my thought here because there's so much to talk about. But, that whole issue around interstate commerce, I get it. But I think, let the states decide. That's what Trump's all about, right? So, why would they care? And, look at Utah, right? When prohibition and alcohol prohibition, Utah was dry for a long time. They just did their own thing. The same should be held true for cannabis with the end of cannabis prohibition. Nobody's shoving anything down anybody's throat. So if, I was saying, if three states or whoever are on board, yeah, let's do it. They don't give a shit about the jobs or whatever. There's another solution. I just think with that, have you guys been out to Glass House Farms?
I've heard about it. We haven't been.
Yeah, it's 5.4 million square foot facility. State of the art. They have AI. They've got all the bells and whistles. It's incredible. The climate. It's yeah. So
it's a unicorn.
That's and they're right now they're probably one of the lowest cost producers, if not the lowest cost producer in the country. And so, over time, you don't need to be growing weed in a warehouse and wherever in the winter. It just doesn't make sense, right? So costs are going to come down, right? That's a given, I think, right? These are all kind of levers to pull that will be effective in combating the illicit market further, in addition to all the busts and everything that hopefully will continue. once we have federal legalization, and I think Schedule 3 is a prelude to full legalization, because now with Schedule 3, the government now can, roll up their sleeves and really better understand. When you have the stigma associated with the Schedule 1, nobody's really willing to kind of step in and kind of take a look at it. But once you have like full access to everything and everybody's on the same playing field, then you're able to advertise in a more effective way. And that would educate the consumer. So you're going to have lower costs. The cost of production will go down. Now you have consumers, hopefully, that will be better educated. And instead of making a left turn to go down to the bodega, if it's still standing there, they'll think twice and go to, a legal channel. But I honestly think a lot of the public is just unaware. They don't live and breathe it like we do. So that's sort of another positive, I think, that will come out of all this.
What does the U.S. cannabis market look like, let's say, if in 5 years from now, federal reform still hasn't happened?
When you say federal reform, do you mean like nothing? Zippo?
Nothing.
I don't think, I don't know, man. I don't think that's the case. But,
is it a cliff? Is it a cliff, you think, if like there's no change 5 years from now? Is that like a cliff that is just...
Yeah, because another positive sign, well, a couple of things too. I meant to talk about this, is, when I was saying like things are all coming together, right? So the whole hemp thing is being addressed, right? They got their eyes on that now, right? And same with banking, and same with, looking into the exchanges. So if nothing happens, the guys that are like, they're on a boat to come on board, like big tobacco or maybe big alcohol, some big conglomerate, right? They will not take that boat and those people, those passengers, if it still remains fairly illegal, because they cannot list on the they can't consolidate those businesses. So I just don't think that's practical, and I don't think, it all comes back to, I just think there's enough people around Trump, and I think his business acumen is going to lead us into the right path.
No, I'm with you, right? And the reason I asked you that was because I want you now to take the other side, right? Let's say all of the reform that you've communicated has happened. 5 years from now, what does the industry look like?
If everything happens or nothing?
Everything happens. Let's say everything happens over the next year.
Well, you guys will be on a beach somewhere in. Another thing I meant to even talk about this, about lowering costs, like exactly what you guys are doing with the extract businesses, and your technology that you've developed. Like that's just another thing that's developed. There's probably other technologies or whatever that's going to facilitate cost reduction.
It's best practices from other industries. And I think that's the most surprising element, is that cannabis didn't reinvent the wheel. As Kellen's quote is, my favorite one of him is, we didn't make fire, right? Like at the end of the day, we are just pulling from other industries and utilizing their best practices in order to implement them, in order to figure out how to achieve the same success every other industry wants, which is have run a profitable, sustainable business.
Yeah, and that makes a lot of sense. And where we are now, we've seen a lot, and we know sort of what to avoid. But I could tell you, like when I started doing this in 2014, there wasn't a lot of things to look at or to hang a hat on, right? And so I thought, when I looked at Colorado, because it was the only state that really had any disclosure, I thought, every other state's going to, follow best practices. Everybody's going to do what Colorado's going to do. And so everything's going to be just a smooth sail to federal reform. But, obviously I was very wrong on that.
So let's do that. 5 years from now, let's say all of the reform has happened. Everything that you've laid out has been achieved. What does the market look like?
So, and we're starting to sort of see this, and this is something I think that, it's a consensus view. It's nothing, oh my God, really? It's that, the industry will likely be consolidated there'll be acquirers in alcohol, or in pharma, and some of the bigger CPG companies will gobble up the better performing companies. And we'll see, I think a lot of us had thought that this year would be the year of M&A. That didn't really materialize. There were more sort of liquidations and so forth than I think most people thought would happen. But 5 years from now, what do I think is going to happen? I think we'll have every state legal, or those who want it. Like I was saying, nobody's forcing any state to sell weed, right? If you want it, fine. And I think, I think until we get to a final sale and who's ever business, I think we'll see a huge acceleration in free cash flow. And for the reasons I cited before, you don't have the 280E and all the other costs of prohibition go away. And there's more efficiencies. You have more talent that comes into the sector. I think, there's been a lot of money that sort of disappeared over the years because acquisitions were made that maybe weren't well thought out. And then in short order, these acquisitions, turned out to, not be what was anticipated. And I think you'll see less and less of that as you have, more experience come in. And hopefully people will learn from, mistakes that were made in the past. I don't know. I just think we're really at an inflection point for a lot of good things to happen. I mean, there's more things that are swinging in the pendulum towards positive outcomes, right, than there are negative. I just think there's, looking at the hemp now, like I was saying, testing what's going on. We already have an HHS report waiting to be signed off by the DEA. There's just a lot of things happening all at once, I think, which leads me to think that something is going to happen pretty soon.
I think that's the perfect way to end it. I think optimism is so back. So Matt, for our listeners, they want to get in touch, they want to learn more, and they want to see some of your writings. Where can they find you?
www.greenwaveadvisors.com. And I would just, point out also that, I am available, for any type of due diligence. I don't say I love to roll up my sleeves and crunch numbers, but I kind of do. I think it's important to have somebody who's able to connect the dots, cross the T's, and read between the lines and ask the probing questions.
Love
and
it.
That's me.
Thanks for taking the time. This was a lot of fun.
All right. Thanks a lot, guys.